I'm going to talk to you about one of the most important documents you got in business, and it's your profit and loss account. That's the whole reason why you all get in your vans or wake up in the morning. Do you know what I mean? To earn money, to make profit, have a living, so you can go on holiday, provide for your family, whatever. Do you know what I mean? Like buy new clothes, like it all filters down to the profit and loss account. So it's the most important document in your business. Everything you do in business filters into this document. So I'm not going to tell you to suck eggs. I mean, like hopefully you've all seen a profit and loss account, and if you haven't, then there's a problem. But at least once a year, like you should get your year-end accounts. If you're VAT registered, you should get hopefully you should get quarterly management accounts, because it coincides with your VAT quarters, and you can should hopefully just ping off a profit and loss account off the system. But if you've really got your finger on the pulse, if you've got a few lads, if there's a lot going on, then ideally you need to have profit and loss accounts at least once a month. So I've got a fictitious plumbing and heating business. So I suppose I'm just going to kick off. I'm literally going to kick off. I'm going to share my screen. I am happy for you guys just to sort of like pipe up and ask questions. I've only got an hour. I've only got until 8:30. So as long as we get through some stuff, I can answer the questions at the end. But if you've got questions during it, this was a quick answer, I'm more than happy to do it. So I suppose let me just set the scene really. This is the plumbing and heating business. The figures go from May 23 to April 24. And this, if I talk to you about the structure, so whenever you see a profit loss account, at the top of the profit loss account, you've got your turnover. Now, for a plumbing and heating business, I think that's so vital to distinguish your turnover for different types of jobs. And I can explain to you exactly what I mean by that, right? So we've got something called nominal accounts in the accounting world, and we need different nominals for what you do. So, for example, if you fit in bathrooms, every time you raise a sales invoice to your customer, when you click on Xero or QuickBooks, or even if I think it should link through from ServiceMate or Simpro or whatever you're using, you can pick what sort of job that is, what category it is, what nominal it is. So therefore, they'll therefore filter through to Xero and have your different nominals in order. So if you're doing a bathroom job, you select it's a bathroom. If it's a boiler installation or gas works, you can have literally different nominals. CP12s, your call outs. If you're doing kitchens, plumbing work, sales, like your routine services and maintenance, it's always good to distinguish your sales. Now, one thing I need to say, that even though this is a fictitious business, halfway through the year, Together We Count started to look after this fictitious business. So you can see when we didn't look after the business and when we started to look after it, the change in the figures and the reporting. And it's really important that I'm sort of like pointing this out, which I'll sort of like go into now. So the second part of the profit loss account, if you like, we've got the cost of sales. So this is everything which it costs directly to make that sale. I always say if you sell a boiler, you've got to buy a boiler. That boiler is a direct cost of that sale. So hopefully that's clear. But the reason why I said like splitting out your sales is so important, and if you can do your purchase, is even more important, because you can quickly pick out trends. Now, this business, prior to us looking after them, grouped all their sales together in one. All their bathrooms, their kitchens, whatever, the gasware, whatever they done, all into one. When we started looking after them, we split out their bathrooms. Oh no, so we gave them the ability to split out their bathrooms. They produced their sales invoices, but we gave them the ability to split out the different categories. Now, as you can see, we've got bathrooms here, turnover. In fact, what I'm going to do, I'm going to flip and highlight it so you can see it. So it's extremely clear, right? And I'm basically proving a point. I'm making it clear as to why you need to know what's going on in your business from a financial perspective. So if we look at a few months, this business isn't making enough money on their bathrooms. So if you look at the cost of sales, so in November, for example, they turned over 28 grand on bathrooms, but their costs, i.e. buying stuff, amounted to 21 grand. Now this fictitious client is quite good. They only buy their bathroom materials and stuff from one merchant. So when we're putting their figures together, we can allocate all that merchant to this code, so we can quickly pick out the gross profit for this for this particular venture. Basically, what it transpired is that's me talking about the materials, but we've also got the labor on everything which you do. Now it's important. So it's important to split out the wages into the different categories of your business. You might just get a monthly wages report and your bookkeeper will just put it on as one figure. What we need to do is we need to split out that figure between the engineers and the office and the admin staff. But what we was actually able to do with this client, we can split out his general engineers and his bathroom engineers and then his office staff. So coupled with splitting out the turnover, splitting out the direct cost to buy bathrooms, and splitting out the engineers' costs, the wages costs, it quickly transpired this client was losing shitloads of money from doing bathrooms. And in April, it was decided to just drop it. Like literally, the client was fucking losing money. It was waking up every day. Like, oh God, yeah, I've got a 10 grand bathroom here. I've got a 5 grand bathroom here. Like, happy? No, you're not happy, mate. You're fucking losing money, and it's eating into the rest of your business, and it's fucking up the rest of your business. Call it a bad apple. These bathrooms for this client was a bad apple. Now, this is a key example of good information in, good information out. Before he didn't have this information, and if he hadn't come to me for help, and if we hadn't changed things, fuck knows where he'll be today. Yeah, so it's really important that you dive into your profit and loss account, but the information that you put into your profit and loss account needs to be good. So basically structure your sales so you can have different categories. Split out when it comes to doing your profit and loss and wages and putting on the subcontractors. Make sure that all the engineers are classed as direct cost of sales, so you can therefore establish your gross profit, and all your office staff, your telephone people, your PA, whatever, yeah, even your bookkeeper, that needs to come under administrative expenses or operational expenses. Yeah, so that's the general gist of like the profit and loss account, if you like, or gross profit, splitting things out. Yeah, and because of this, the business can turn things around. It can literally turn things around, focus on what we call it the 80-20. There's what's the 20% of, so basically it's called the Pareto analysis.
Pareto principle,
yeah, that's the one. So what's the main 20% driving force in your business? It's 20% of the causes is 80% of the effect. So hone down on what's really making you money in your business. Double down on that, drop what's not. Yeah, and that information all comes from your profit and loss account. Now, I suppose let's dive into some ratios. So as everyone know what gross profit is. So gross profit is how well you can turn your direct costs into money. So for example, for this business in May, they had a gross profit of 35 grand over a turnover of 91 grand. But as a percentage, their gross profit percentage is 39%. Now, if we look at the total overall for the year, let me just move my mug out of the way. Their gross profit overall was 24%. Now, bearing in mind, this business had a shit year because their bathrooms has cost them loads. So going forward, now that things are tweaked, it's going to be a lot better. So some of you guys should be operating a lot more than 24% gross profit overall. That's all down
from your like experience. You know, I've always worked on the basis that realistically in this industry it should be above 50% really for a gross profit. Would you agree? Would you disagree? What's your thoughts on that? Or is there no sort of general rule for that?
Right, first of all, good question, and it all depends. So Wayne, you said straight away that you don't split out your engineers on your gross profit. So,
no.
So your gross profit is going to be completely different to someone else who does split out the engineers. Yeah. So if you're talking about gross profit, but if you're purely focused on materials, then down here I do have a percentage of materials. Basically, I have a material spend as a percentage of sales, and for this particular business, because we're purely looking at. So
it's avoided. I see what you're doing. Yeah,
bathrooms and we're excluding the labour. It's 41%. Now, Wayne, to give you a black and white answer to a black and white question, I can't. right? The reason being, it's all good. It's all down to you to how good you can sell the job. Whether you're buying materials in bulk, in which case you're getting a discount, in which case when you do sell them, you've got that extra markup. But bearing in mind, you've then spent shitloads on storing that material. Do you know what I mean? Or do you know what I mean? Literally, there's no one size fits all, and that's the beauty about you, all you guys being here. Every business is different. Yeah, but the thing about business is that you need to see the wood from the trees. You need to probably take what I'm saying, take what Wayne's saying, take what other people are saying, and roll with what you want to roll with, and use what you want to use. So there's no like one size fits all way of doing things or percentage which you should do things, because there's many ways to skin a cat.
There's just too many variables, isn't there, between everybody? Yeah, makes sense.
And yeah, God, I mean, I look after like one-man bands, and and they get their customers to buy their materials, so therefore their gross profits like fucking 99%. Like,
that should get done for VAT avoidance.
it happens, yeah. So there's no like one way of doing it, but yeah, you just got to look at the makeup of your business. I'd always recommend putting a markup on materials. Yeah, but what that markup is whatever you can get away with. The higher the better for your business. But if you put it up so much, no one's going to fucking buy. Do you know what I mean? Or you're going to price yourself out of a job, and getting jobs is expensive. There's a cost to get jobs, even the cost to serve, to leave, and to quote, and everything else. There's a cost to that. So you've got to. It's that balancing act, isn't it? But again, if you've read the quote handbook, you'll know to offer a bronze, silver, gold, so that you can. Once your profit and loss account is good, it's perfect. You've got the figures here. I want to show you what you can actually therefore do with your profit and loss account. What you can get out of it. So we're going to take things further. So by Ben, you asking that question, I'm probably going to answer it indirectly. I'm going to answer it long-windedly, just to make sure you fully grasp everything. So right, so we've taken the profit and loss account. It's clear the client's made. I don't know, yeah. So let me just go on to the next report. This is a break-even analysis report. And what we're basically doing is trying to work out what the break-even point of the business is. Now, break-even is when your costs equal your income. Yeah, you're not making a profit, you're not making a loss. No one goes into business to break even. Yeah, let's just make that extremely clear now. No one goes into business to break even. If you do, you're an idiot. Yeah, and you're going to burn out. Yeah, because it's just not going to work. So we've now got a wicked profit and loss account, which has been broken down into different sections. But we need to take the information off of the profit and loss account to make more use of it, and that more use is going to become clear now. And I'm going to tell you what we're going to do. So I'm going to work from the top down. First of all, we always look at your engineers. Now, this particular business has got 5 engineers and they've got 1 apprentice. They've got like a main operations engineer, if you like. I also need to point out that there is like 1 director, but the director, yeah, which will come into play later. Sometimes the director's on the tools, sometimes he's not on the tools. Yeah, it's very much like pick and choose. But yeah, he's got one main, I suppose you call it like a supervisor. Then he's got like a supervisor's got a right-hand man, and then he's got his other workers. Now this is all paid monthly, so this is all monthly pay. So 5 engineers, but then the average pay between all these 5 is 2,770 quid. Now, when it comes to having an engineer, you've got costs with that engineer. You've got something called that they have to take. They take holidays. They have to take 20 days holiday a year, plus the 8 holidays, plus the 8 bank holiday. Now, even though you're paying these a salary or an hourly rate, when they're off, you still got to pay them, but they're not earning money. So therefore, I like to add it on as a cost. Yeah. So we add on 20 days. We proportion 20 days holiday onto their pay to add it on. So when they do take days off, it's not a problem because you proportion for it. Yeah. We've got employers.
Makes sense,
yeah. Okay. We've got employers' national insurance currently at 13.8%. Could increase, could decrease. God knows what's going to happen tomorrow. We've got pensions. Pensions 3%. As a boss, you've got to contribute 3% of your gross, your engineers, sorry, all your staff's gross pay, and it's 3%. Sometimes the engineers will take days off training, and you can factor those days in because you still got to pay them. Yeah, so you might say that they take off, I don't know, like whatever. You can just put like a couple of days, which would be 500 quid. yeah, a year. If I take a couple of days off a year, what does that equate to? Like a day rate, which we're trying to work out an engineer day rate. What's the one cost? What's the day rate for an engineer? So we can add that in. So at the minute, an average engineer costs you 156 quid a day just to pay salary, or her. I'm not being sexist here. Yeah. It's also important to do the same sort of calculation for an apprentice. Now, so I need to make clear, apprentices, unless they're going out and making you money, they are a cost to your business. They're an investment to your business. They're not going to make you money until they can start going out and doing their own jobs. They're in their own van. Do you know what I mean? And you're recharging them out of that. Sometimes you might get lucky. You might be able to build out a 2-man team. But until that happens, an engineer is a cost to your business. They'll put a fucking foot through the bathroom. Do you know what I mean? Or they'll smash up a van. Or do you know what I mean? Like as was it Vinny was saying earlier? Yeah. So an engineer is a cost. Now let's take things further. So we're looking at the profit and loss account here, and as you can see, this business has total costs. It has total costs of the business is 205 grand. That's the total. That's the total cost of the business. So we've basically taken all of the business expenses for the year from the profit and loss account. I'm just going to put in 205 grand. So it's okay. So when I talk about cost of the business, we've got the office people. In fact, I'll run through it and break it down. Just so it's clear. So these are all the other costs in the business, not the direct costs. The direct costs we've covered: engineers, materials, done. But the business has got other costs to survive. We need to recover. We need to apportion. We need to find a way to apportion that to make sure that we're covered in our hourly rates, which we charge to customers. Now, what we are therefore recovering is the people in the office, the admin staff, their national insurance, any advertising spend you might have as a business, accountancy fees, bank charges if you're using Stripe, any donations you might make, finance charges. Let's say that you've got vans on HP, just the hire purchase element is the expense. So we have to put all this in. Insurance, guys, you're paying a lot on insurance because what you're doing is dangerous. Light and heat, this particular client does have an office, they do have to pay for their gas and electricity. And then also fuel. The client's paying out on fuel and repairing those vans. So these are all expenses which is going on in the business. You need to fucking cover them. You need to recover on them. You need to cover them. You need to recover on them. Yeah. So basically, the total cost to run this business is 205 grand for the previous 12 months. So hopefully that's all clear. So if it's costing 205 grand just to run the fucking office and the vans and stuff, we need a way to recover on that. Now, the way we recover on it is your engineers. Yeah, your engineers as fee earners or cost centers. So if you've got 205 grand's worth of expense, and this particular client's got 5 engineers, all we simply do is we take, like, one engineer needs to recover all of the admin costs within the business. Yeah, so simple calculation: 205 grand divided by 5. One engineer who costs you, on average, I can't remember the figure. Yeah, on average, like 32 grand a year, also needs to cover an extra 41 grand's worth of year, but also needs to cover an extra 41 grand to cover all the operating costs within your business. That's just that one person's apportionment. Because there's 5 engineers, 5 times 41 is 205 grand. You're covered. Now, like I said, no one goes into business to break even. But we can see straight away that in order to break even, an engineer costs 131 quid a day, plus we've got the apportionment of the fixed costs. Yeah, so therefore, the total cost of an engineer, including his share of the office, is 287 grand. Sorry, it's not, 287 pounds. In order for that one engineer to break even, and your office to break even, and your business to break even. I've actually just changed the figure here because they're putting it for 5 engineers. But now, one thing which I need to make extremely clear is that when we're looking at the break even, so we've got the cost, the total cost of an engineer for a day for a business to break even. So a business needs to take in at least £313 in one day to wipe its ass, to be covered. And if less, you're making a loss, and if more, you're making a profit. But so let's take this a step further. Let's take it a step further and say, right, you've got two types of engineers in my eyes. You've got these service engineers who probably go out jobbing, routine services, CP12s, fucking fixing taps and toilets. They might do 5 jobs a day, 5 billable jobs a day, 5 billable hours in a day. So therefore, we will take the total cost of an engineer and divide it by 5 jobs to work out what's the break-even hourly rate for a service engineer if he or she's doing 5 jobs in a day. And it works out to be 62, 63 quid. Now, on the flip side, if you've got an installer who goes to one property in one day, he's going to be spending 8 hours in that property, like combi in, combi out, then the break-even rate is 39 quid. So again, which all comes back, 39 quid. So 39 quid times 8 hours, it all comes back to the 313 quid a day. Right, but I made it clear that no one goes into business to fucking break even. There's just no point. So what we can do within your business is we can sort of take this further and work out what you need to be charging or what you need to be recovering on to make sure that you can get your holiday, to make sure you can have that whatever you want and whatever earnings you want. So, but I need to go over a few things before that. Now, because we're purely looking at the cost of the business being 205 grand, this is just profit and loss items. Now, when we're looking at profit and loss, we're excluding VAT. So hopefully that's quite obvious. But what we don't see in the profit and loss account is your bounce back loan going out, your funding circle loan, or do you know what I mean, or the loan back to your family to get the business started, or even all the van loans you've got. So we therefore need to manipulate the amount of money which we need to get in to make sure the business is covered. So let's say, for example, we'll multiply this up to 12 months. Now, in a given year, they're paying, say, 24 grand. Let's say 12 grand in loans out in a year. It's about £1,000 a month to cover the vans and everything else like that. Now, this business owner wants to go to Ibiza next year. So and he wants to make sure that he can afford that. That's he's working hard all year to make sure he can go to Ibiza. Now, that with his family, so that's probably going to cost about 6 grand. So he wants to make sure that he can have that holiday. Right. This business owner also probably wants to earn about he lives in like a quite expensive part of the UK. He needs to be earning at least 70 grand a year to be happy and to keep his wife happy and kids. Right. So because this is desired profit, if you're making profit in your business, because we're no longer breaking even, we are paying corporation tax, we're paying personal tax on that. So let's just add on I'm just going to add on a quick percentage of 30%. 30% of this. Let's just put in 30 grand of taxes. You've got to cover your ass. Another thing about covering your ass is let's always put in a contingency. Anything can happen in the business. It's always best to overcharge your customers and undercharge your customers to prepare for the what if. That we can just put in, say, 500 quid a month for that. So let's just put in 6 grand. One thing which I didn't say, actually, if I quickly nip back to the profit and loss account, I know you guys, a lot of you will buy materials, send them for a markup, and that's not, and none of the markup or anything like that is being considered for this break-even analysis. The reason being, there's always hiccups. There's always hiccups in the business. And if you're making profit on materials, see that as a bonus for your business. You can't predict. You basically you can't predict what you're going to earn, like profit-wise, off of materials. So therefore, if you're working at your break-even point, you ignore it.
It's not a controllable cost, is it? So you can't. No, I understand that.
Don't. It's like accounting for profit, but you haven't got that profit. So you're banking on something which hasn't happened. Therefore, just play it safe. Play it safe. We call it being prudent. Play it safe. Don't account for it. Don't bank on it. Don't do it until you've got it. You haven't got it till you've got it anyway. So that's a different point. So yeah, so just as long as that's, I didn't say it before, so I need to make sure that's clear. Right, so what we've now gone from is a break-even recovery rate for an engineer of 313 quid, right up to £409 per engineer per day. But bearing in mind, you've got 5 engineers, and this is going to give the business owner the life which he wants. Yeah, he wants to earn 70 grand. He wants to go on holiday next year. All the loans are paid off. Yeah, so straight away, if a job in engineers is going out doing CP12s and literally doing 5 jobs a day, you break even. This is no longer a break even point. It's a this is what I must charge point to have the life which I want.
I call it my desired rate. That's so I've got a calculator that's like a fucking year 1 student version of this, if that makes sense. Like yours is a lot more advanced. But yeah, hopefully the lads are understanding and keeping up. Please shout out if anyone isn't up to speed with what he's saying.
All good, okay. Right, let's take it further. So we know what the day rate is per engineer. So per week, it's got like one engineer needs to bring in 2 grand to cover his wage, the van, the office. In a month, if you're working 20 days in a month, that's 8 grand. Yeah, or in a year, that one engineer has to bring in, like turnover wise, 106 grand. A lot of so I'm going to wait. I'm taking this further. There's a lot of people say to me, Aaron, when should I fucking hire an engineer? And my point and my reply back to that question is when you can cover their wages, their van, their apportionment to the business, and what you want out of the business, i.e. the desired profit. Now, I'm going to link back to the profit and loss account now, because on the profit and loss account, we used the figures and we worked out that the percentage material spend as a percentage of sales overall is 41%. What that basically means is the business gets in £100, 41% of that is materials, 59% of it, the rest of it, is therefore labour, overhead, everything else. Right. So answering the question, when should I hire an engineer? I can use this spreadsheet to therefore say to someone, I know that your percentage of material spend in a year is 41%. So therefore, I take the total cost of, I take the total desired break-even point of an engineer, add on the 41% to then work out what you need to generate in order to make that engineer like worthwhile.
Yeah.
There's 2 ways to look at this. You could just say, I need to bring in 106 grand of labour only work, or based on past experiences of my business, I need to bring in 150 grand's worth of overall work.
Turnover, yeah,
turnover including the materials. Now, one thing to bear in mind, guys, this is fucking models. Do you know what I mean? Like, the world's changing. The plumbing and heating business world is changing. Your material spend one year might fucking rocket because you're buying more heat pumps, and that might not have happened in the past. So all we're doing is we're taking previous information and using it for the here and now. Now the best way to sort of make this even more, I suppose, useful and apparent is to be able to predict to the future. Because at the minute, because I've only got an hour, we're literally using historic information to give us the here and now, but we want the future because you're invoicing in the future. You're quoting for rates which happen in the future. So the way to do that, guys, just have a buffer. Have a buffer. Now we've got 6 grand contingency there. Now, if all this goes to plan, perfect. The business owner is looking at a good profit, good money. Now, because we're talking about contingencies or the what ifs, you could just put in an extra 20 grand there. So you know as a business that you need to be charging this as a day rate, and if I don't know, there's hiccups or something happens, it doesn't matter because you've got a big contingency there. You've got a big buffer.
If you miss a few days here and there, it's not robbing too much away from it, is it? Because you built in the contingencies there.
Yeah. Or if an engineer fucks up and the van's off the road for a week, you know what I mean? It doesn't, like you've got a contingency plan for it. But where's there? So that's the easy part in my eyes. I'm telling you guys, Like I could do models and tell you guys what to charge. Now, what you guys are really need to do, and Wayne brings in help, and he also tells about sales, is that you as a business now need to make sure that you get the work in where you can charge out these rates. You can charge your rates which you're worth, which you desire.